Hello, everybody. Welcome to Talk About Houses. I'm Todd.
I'm Juana.
So today we're going to talk about the predictions for the housing market and home prices appreciating over the next 12 months. This is all brand new data. Pretty much almost all these articles have come out in the last week. This headline one here that we're going to show you came from Business Insider. This did come out at the end of the year. It said it's looking more and more like 2022 is a much better time to buy a house, with one big catch. Mm-hmm. The big catch is they weren't sure what was going to happen with interest rates.
Right. Well, we know what's happening with interest rates now. We know that they've gone up a couple of percentage points in the last 6 months, and we know that they're going to keep going up maybe as much as another couple more percentage points by the end of the year. So where does that leave us with our home values? If you don't have a cup of coffee, sit down with a cup of coffee because there's going to be some good graphs and some good information. So here we go.
Okay, a lot of good graphs. Okay, we're going to start out. Well, so what we're going to do is we're going to go with the head analysts. These are the companies with the most data that look at this all the time. We're going to start with Zillow, even though we hammered Zillow on the last video that we did because they predict they showed all these markets that were overbought. But then at the same time, they're saying that the home price growth is going to be like 15% over the next year. So put up the first slide here. This is the year-over-year change in home prices. Now, when you look at the brown lines, the tan lines, that's historical. That means year-over-year, that's how much home prices went up. So it's not month-over-month, it's year-over-year. So from February 18 to 19, they went up 4%. And that's all normal. Everything you see below that 5 is completely normal. Everything above the 5 is pretty hot. Everything above 10 is pretty hot, even hotter. And everything above 15 is smoking hot. And they're actually predicting that year over year, that it's still going to pick up. The home prices are going to pick up. But they're saying year over year from now till 2023 is going to be about 15%.
Right. So keep in mind that every time interest rates go up, they do take a bite out of that home appreciation, right? Because that just means less people are able to purchase the house because those are the people who require financing. However, what we've seen in the last few years, really since the Great Recession, is that we do have more and more buyers that are using cash to buy homes or that are putting down larger down payments. So while traditionally every 1 point that the interest rate goes up, it's taken out about 4% of appreciation. I don't know if that's going to hold true going forward because I think our paradigm has shifted with people putting more cash down as a down payment, with people purchasing more properties cash. I don't know that 4% is really what's going to happen going forward. It'll be interesting to watch.
Now, we already have the first bit of data that based on, so interest rates were 3.3% average, and they went up to 5.3%. They went up by 2 full points.
Yeah.
And that happened actually within like just a few months. Zillow revised their forecast. This literally just came out, that home prices would go up only, instead of going up 18%, only go up 15%. So you can see they're taking into account interest rates already. They're saying, hey, look, interest rates. Now, Freddie has said it's 2%, it's 4% of a home price reduction for every 1% in interest rates. But that's an average. It's not, this is a hot market. So maybe in this market that's cooling off a little bit. But what Zillow's saying is a 2% raise is going to knock, instead of home prices going up 18%, they're only going to go up 15%.
Right. And keep in mind that what they're doing is they're using mostly historical data. And historical data really doesn't take into account what's going on in our marketplace today, which is different than what's gone on in the past, like I said, as far as cash buyers and bigger down payments. But there's also, we have a shortage of homes, which we didn't have to this extent in the past. We have this whole shift as far as people relocating to other areas. We also have the millennials that are coming into their own and they're purchasing homes. We also have inflation that's making people want to purchase homes as a hedge against inflation. So there's so much more in the mix. There's so much more variables than just interest rates, that to just hang your hat on interest rates is unwise.
And Wall Street buyers don't care about interest rates because they're not getting loans.
Right.
So that 4% number did not include Wall Street in what their activities in the market.
Right. Remember, Wall Street is a new phenomenon in the market. So historically speaking, there's no way to quantify what they would have, what impact they would have had in the past. So this is a whole new impact that's new to the market.
And here's another thing about Wall Street buying that you have to think about. When an investor buys a house, they own it.
Right.
And then when they want the money, they have to put it on the market and sell it. Wall Street doesn't do that. Wall Street's not going to say, hey, our fund bought 80,000 houses. Let's hire 80,000 agents and sell the houses. They're going to call up their buddy at another bank and go, hey, we got 80,000 houses, it's 13 billion or whatever. Do you just want to buy them?
Right.
Like, we'll just write a one page, here's the houses, they're all yours.
Right.
And then they're being serviced by this company, but we need to get them off the books. And they'll be like, okay, well, I don't want to pay that much, I'll give you a little less. Fine, we'll take it, right? So that doesn't affect home prices because you don't even know what's going on. They just, however they're deeded, that information probably just gets handed off to the next person.
Right.
So it literally takes housing inventory out. It's not likely the banks would come and say, okay, we need to sell 80,000 houses, because if a bank needs to sell 80,000 houses, they don't have months to wait.
Well, not only that, but keep in mind, you're not even going to see those go through the recorder's office because they're not going to be individually valued for recording purposes. What they're going to do is they're going to take this LLC and sell this LLC to some other entity or whatever vehicle these properties are deeded in. So you won't even see that in that way. They are just being transferred as a whole lot to the new owner. So there will not be a way to even in any way revalue these properties unless whoever is doing the transaction says, hey, we value this portfolio at this amount. But even so, that's fine. Then they're valuing the whole portfolio, which includes homes from all over the country, and there's really no way to value them individually.
We're going to jump to Fannie and Freddie. Fannie Mae says that home prices they expect to go up 11% this year. That's year over year. And 3% in 2023. So I think they're predicting 2023, the market goes back to normal. That's
right.
Sort of the prediction. We know that the Fed is going to try to slow down the economy to try to stop inflation. It'll be interesting to see, we'll know more in 6 months how successful the Fed has been. We may even know more in 3 months, but it's probably going to take 6 months for us to figure this out. And as long as you don't crash the economy and we have inflation without a growing economy, that could probably be not good for real estate. But then the other thing is if we have inflation, home prices are going to inflate. So home prices potentially could keep going up, right?
Right. So, my concern with that is that they keep raising interest rates and they raise them too far, meaning they keep going when they should have stopped and let the market adjust for all that. It takes time for the market to adjust. It's not instantaneous. So what I'd like to see is I'd like to see them maybe raise interest rates up until the early fall and then stop and then let the market catch up.
Yeah. And remember, they're not just raising rates to stop housing, right? They're raising rates to stop a lot of borrowing and growth. Because what businesses do is when they feel money is cheap, they borrow to grow, to capture new customers and grow the businesses. And what they're trying to do is, and there'll be some companies who say we don't care because we're Apple or we're Google, and we're sitting on a ton of cash, and we're going to go acquire other companies, or companies with high cash flows, like maybe airlines and companies like that just have a ton of cash all the time, even though they may not be profitable. They have freedom to do things, regardless of what interest rates are doing necessarily. So, Bank of America has the lowest of everybody we look. They have the lowest forecast, 10% for 2022, 5% for next year. What it looks like the market going back to normal. what this would look like on a graph. And when you look at this graph here, remember, this is not, a lot of people look at this and go, oh, prices are going down. No, this is the change in appreciation. So prices will go up 10%. This is additive. You have to add this on top of the darker lines, right? But if you look at this, if you step back and look, what it looks like is prices are chugging along. They really start going up, and then they kind of level off and keep going off into the sunset up at 4.6% a year, which is the historical change in the real estate market. It's 4.6%.
Right, but think about this. You buy a $500,000 house, it appreciates at 10%. You're paying 5% on your mortgage. You're doing okay, because that $500,000 has appreciated much more than if you had the money sitting in the bank, which you didn't have the $500,000 because that's why you got a loan at 5%. So you're actually making 10% on $500,000 when you don't actually have $500,000. You maybe you put 20% down, so you maybe put $100,000 down. So kind of keep that in mind. Real estate still makes sense under the right circumstances, particularly since we all need a place to live, right? So if you need a place to live, you get a tax deduction, it still appreciates, it's a hedge against inflation, it may still make sense. So take a look at that and see what pencils for you.
We are actually rooting for this thing to level off and kind of chill out a little bit, especially here in Vegas. Mm-hmm. If you know anybody in real estate, you can ask them, hey, do you have any listings? How many offers do you get on them? And they'll be like, oh my God, like we got like 6. And then we had to counter every one of them, right? And then if they're working with buyers, and I see the posts on Facebook all the time where agents say, oh, I wrote, like there was one I just saw today. And the agent was complaining that she made 2 offers without any contingencies over list price on 2 different buyers and didn't get either property.
Right.
Yeah, but people are offering more.
Right.
Or they have cash, or they're not FHA or VA. They're offering, I'm putting 20% down or 50% down or something like that.
Right.
And they're just better offers.
Right, they are. And it doesn't really matter on the price point, because we're seeing the same thing in the luxury market. When our clients are offering substantially more than list price, or and they don't have contingencies, they're willing to pay the difference between appraised value and purchase price if the appraised value comes in below the purchase price, but somebody comes in with more money still, and that's happening. So this is probably going to continue to happen for a little while, particularly as the market kind of adjusts the new interest rates, and until some of the buyers step out of the market, this is probably going to continue. I don't think it's going to go away altogether even by the end of the year. I think desirable areas, desirable properties are still going to see this, because the housing inventory shortage isn't going away.
Yeah,
it's not being relieved. So what the interest rates are doing is they're having some of the buyers step out of the buyer pool, fine, but that's not enough to alleviate the shortage of inventory.
I mean, you have to ask yourself a question. If somebody sells their house, where do they go? Mm-hmm. They don't just disappear. They have to go somewhere. And so they either buy in another market. Mm-hmm. So it's a net, equal. They sell a house, they go buy a house, they move. We see this a lot with Referral Cloud, the startup that we run, where it's somebody selling a house in one market, and then the agent uses Referral Cloud and to refer them to the next agent. That's how the platform works. It's a tool for real estate agents, search engine for real estate agents to find the next agent. Right. To send the deal to. But they're always buying. Mm-hmm. They're almost never renting. They're selling in this market in Phoenix, and they're moving to South Carolina, and they're going to buy a house there. Or they're selling in LA and they're moving to Utah. Mm-hmm. Right? We had somebody that sold in Las Vegas, they moved up to Kennewick, Washington. Right. So they're not like, I'm selling and that's it. I'm just going to move in with my parents. They're not just dumping a housing unit on the market without replacing it in some other market. So, like Juan has said, until we see more building, there are going to be upward pressure on prices, and it is not unreasonable. And real estate has always appreciated faster than the CPI, core CPI. Always. It always beats the core CPI. The only thing historically with a higher appreciation in real estate has been the stock market, the general stock market, because those are companies that grow and they add products and they have higher profits. and they return profits to shareholders.
Right, and they also have higher volatility. With real estate, you get a physical asset. With stock, you get stock.
Yeah, you get stock. But in most growth stocks, like, I don't know, has Amazon ever paid a dividend? I don't know. Google, I don't think they've ever paid a dividend.
I don't know.
Apple hasn't paid I don't think they paid a dividend. Even most airlines haven't paid dividends. I know for a while Delta or somebody was paying a dividend, but almost nobody pays a dividend.
No, there's still companies out there that pay a dividend.
Exxon pays a dividend. Banks pay dividends, but not really high. They pay something.
Right. So, mostly
energy stocks.
Mostly you make your money through the appreciation of the stock. Kind of same thing with real estate. You make your money generally through the appreciation of the property when you sell it.
Unless you're investor.
And
then you make money. You make a killing, because what happens is you make rent,
right,
which usually exceeds if you have to get a loan, and then your return on your investment is really high, because even if you put 20% down, the money you get after you make your mortgage payment, you compare that, and then the other thing is that home's appreciated.
Right.
So people who anybody who bought a house in the last 10 years you guys are geniuses out there. You're just like Warren Buffett for the real estate market. You nailed it. When's the best time to buy a house? Anytime in the last 10 years.
That's right.
Even better if you went back 10 years ago, it's like buying Bitcoin in 2010, right? Bitcoin's appreciated a lot more than home prices. So what our prediction for Vegas is, we're sticking with what we said at the beginning of the year. I think we said 12 to 15% was our prediction for Las Vegas for 2023. We nailed it in 2021. Like literally, I think we said 18 and 15. And it was definitely on the high side. We're predicting a little less this year. 15 to 12 to 15%. I think those are reasonable numbers. We'll make another prediction probably in 6 months for 2023. May wait till the end of 2022 and see what's going on. Zero forecasters are predicting a decline in 2023. I think everybody's kind of hoping for this thing and we're not rooting for it to keep going up. We're not trying to pump people to buy, because it doesn't do us any good to have you buy when there's no inventory on the market. And it's not like we have a problem getting people to buy. We put a house in the MLS, it's sold the next day.
Right.
So we don't need people getting all excited about buying.
But if you want to sell a house, give us a jingle. We would love to help you sell. If you like the video, hit the like button, hit the notification bell so you get more videos from us. Share the video with your friends, and leave us comments. We want to know what you think.
And I respond to all the comments, even the snarky ones.
He likes the snarky ones.
I like them.
All right, we'll see you guys on the next video. Bye.
Bye.